It's January 6th, 2025, and the markets are off to a roaring start. Investors are diving headfirst into the trading year. We're seeing a surge of optimism, fueled by strong corporate earnings. Buckle up, because this year promises to be an exciting ride. The bulls are clearly in control. This is what we like to see, a market firing on all cylinders. Let's enjoy the positive momentum and see what the rest of the year has in store. The Dow Jones Industrial Average breaks through 40,000. The S&P 500 hits a new all-time high. The Nasdaq Composite soars past 2.5%. Investors are confident in the American economy, strong corporate earnings, and steady economic growth. Wall Street is taking notice. Broad-based gains across multiple sectors. From technology to healthcare, consumer to industrials, the market shows a vibrant economy. The good news isn't confined to the United States. Global markets are also joining the rally. Europe is seeing strong gains, with the FTSE 100 in London up over 1%. Across the channel, the German DAX is up nearly 2%. And let's not forget about Asia. The Nikkei 225 in Japan closed higher, and the Hang Seng Index in Hong Kong is also in positive territory. This synchronized global growth is a very positive sign for the global economy. It's clear that investors around the world are feeling optimistic about the future. We're seeing increased demand for risk assets, and that's driving markets higher. It's a great time to be an investor. The technology sector is leading the charge today, fueled by strong earnings reports and positive guidance from industry leaders. Investors are excited about the potential of artificial intelligence, cloud computing, and other cutting-edge technologies. Healthcare is also performing well, as investors are betting on continued innovation and growth in the healthcare industry. The aging population and the increasing demand for healthcare services are creating long-term tailwinds for this sector. However, not all sectors are participating in the rally. Energy stocks are lagging behind as oil prices have slipped on news of increased production. This is a reminder that not all sectors move in tandem, and it's important to diversify your portfolio. Section 5. Tesla charges ahead, Apple shines, Meta stumbles. Tesla is once again stealing the show, with its stock price surging over 5% today. The electric vehicle maker announced record deliveries for the fourth quarter, exceeding analysts' expectations. Apple is also having a great day, with its stock price up over 3%. The tech giant is expected to report strong earnings later this month, driven by continued demand for its iPhones, Macs, and services. However, not all tech giants are sharing in the good fortune. Meta Platforms, the parent company of Facebook, is down over 2% today. Investors are concerned about the company's slowing growth and increasing competition. Section 6. Economic data points to continued growth. The positive market sentiment is being supported by strong economic data. The Labor Department reported that the U.S. economy added a healthy number of jobs in December, exceeding economists' expectations. This is a clear indication that the labor market remains strong. Furthermore, the Institute for Supply Management, or ISM, reported that its manufacturing index rose to its highest level in several months, indicating that the manufacturing sector is expanding at a healthy pace. This is another positive sign for the economy. These strong economic indicators suggest that the U.S. economy is on solid footing. With low unemployment, strong consumer spending, and robust business investment, the economy is well positioned for continued growth. Section 7. A bright future for investors. Looking ahead, the outlook for the market remains positive. Corporate earnings are expected to remain strong, fueled by a healthy economy and continued innovation. The Federal Reserve has signaled that it will continue to raise interest rates gradually, which should help to keep inflation in check. Of course, there are always risks to consider. Geopolitical tensions, inflation, and rising interest rates could all potentially derail the market's upward trajectory. However, the current environment remains favorable for investors, and there are many reasons to be optimistic about the future. Section 8. Stay ahead of the curve. As always, it's crucial to stay informed and make investment decisions that align with your individual financial goals and risk tolerance. Don't get caught up in the hype or make impulsive decisions based on short-term market fluctuations. Remember, knowledge is power. By staying informed about market trends, economic indicators, and company performance, you can make more informed investment decisions and increase your chances of success. Happy investing!